Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. Foreign Minister Anita Anand says Canada will bolster its presence in the Arctic. In an interview with Bloomberg at the World Economic Forum, Anand said Canada will open a consulate in the semi-autonomous Danish territory next month. This is a move that had been in the works before U.S. President Donald Trump triggered turmoil by threatening to control Greenland. Netflix has reached an amended all-cash agreement to buy Warner Brothers as it battles Paramount to acquire the entertainment giant. Netflix had previously agreed to pay in cash and stock. Warner plans to call a special meeting of shareholders to approve the deal. Netflix says stockholders should be able to vote on the transaction by April. The changes are designed to expedite a sale and address claims by Paramount that its cash tender offer is superior. Shares of 3M are falling today. The maker of stationery products and electronics materials missed profit expectations for its full-year outlook. It's down by about 7.25% right now. The American company has plans to reorient its new products and increase efficiencies across its industrial base. The CEO has been actively looking at shifting away from low-growth businesses and increasing the company's use of digital products and bringing products to market faster. And taking a look at the markets right now, futures earlier were looking terrible. It's bounced back a little bit, still down. You can see the TSX is off now by 0.38% in the wake of the Trump threat of tariffs and everything that's going on with Greenland. And we just heard the speech by the Prime Minister at Davos. We'll see what kind of an impact that might have south of the border. And we're going to see, let's see, yeah, they're coming back a little bit. They opened down upwards of closing in on 1.6, 1.7%. You can see they're still off. The S&P 500 off by 1.1 roughly, Dow by about a point, and the NASDAQ is off by about 1.25. All of this on the comments by Trump about Greenland and the threat of tariffs on European countries. U.S. stock markets are down after U.S. President Trump threatened to slap a 10% tariff, an additional tariff on imports from 8 European countries because they oppose having America take control of Greenland. Let's get more on this from Drew Pettit. He's a U.S. equity strategist with Citi Research. Drew, thanks very much for joining us on another volatile day. It's been an interesting year, interesting start to the year so far. Thanks very much for joining us. Did you get a chance to hear the Prime Minister's speech at Davos just now for the Canadian Prime Minister?
Yeah, just the tail end. And look, from a high level, boy, 2026 starting to feel a little bit like 2025 right now with tariffs coming back. Look, when we think about the impact on businesses around global trade, if you start adding uncertainty around trade for multinationals and big businesses, it leads to uncertainty around fundamentals. It leads to a lot of repricing in markets. We saw that last year, and we're starting to see like early little pieces of it this year. You know, our high level math on the US, for every 10% increase in overall effective tariffs, you get about $5 in potential earnings headwind. When you think about what's happening with Greenland and the European Union around tariffs right now, you know, that could be $2, $3, maybe $4 at most. So markets taking in its stride to start because it's relatively focused. But yeah, again, starting to feel a little bit like 2025 again.
How much more can the markets take this in stride before it maybe we start to see cracks, do you think?
It's funny. The one thing that's changed, look, is you have a tax bill that passed last year that is definitely a tailwind. So to us, if you're getting these impacts on fundamentals for $4 or $5, let's say, you really probably hurt the broadening thesis. It's probably going to hit the cyclicals more. I would say the aggregate market probably takes it in stride. You probably just have less upside to earnings estimates for 2026. Look, the secular trends of AI really aren't hurt by this, and that's still a major component of the U.S. markets.
So how are you treating all this as you look at 2026?
Yeah, it's funny. We're still focused on the fundamentals and the growth. This does impact the cyclical side. It affects the major multinationals, but I still want to go to places in the market that where I have the highest conviction and growth. It's still the AI trade. A lot of interesting stocks there that are getting really good return from a cash perspective on all the investment in their business. And some of these inflecting names that, again, while we got tariff news, we were still probably past peak tariff uncertainty last year. So inflecting growth down in small cap and value, and then mega cap growth for kind of the AI and secular growth trade. I think pairing them together, it gets you through a lot of this noise.
Now, any concern? I mean, the Mag 7 were taking a hit today, or at least in the futures in the pre-market earlier today. I'm not sure what they're doing right now. I haven't seen some of the numbers in the last couple of minutes, but they were taking. Any concerns that people are going to start shying away from them? Are those the ones you're talking about?
You know what's funny? It's some of them that still look really attractive. We stopped thinking about the group as a whole as trading as one kind of big bucket. There's a lot more idiosyncrasy between them. The ones that get the best return on CapEx are really your NVIDIAs and your Microsoft stand out there. And the ones that look really reasonably priced still to us, Amazon and Meta. So again, it's going to be about idiosyncrasies up cap, especially if you get a lot of noise on the policy front.
And now from the small cap side, you're looking the value. Where are you looking? What opportunities do you see?
That's funny. In transports, you actually see a lot of opportunity in inflecting growth. So RRX, Regal Rexnord, is just a name that our industrials analyst really likes. And you see that earnings downtrend turning into finally an earnings uptrend. So that's more on the industrial side. Again, rails, another kind of part of this thesis as well, as economic activity actually hangs in and you exit, I would say, a transport recession. And then the regional and small banks in the United States, if consumer and credit holds in, those names could still be up and to the right when it comes to earnings. So a lot of opportunity in that small cap value space that trades at like a 10-turn discount to large cap growth.
And with the transport sector, you called the coming out of a recession. What gives you that confidence?
Yeah, it's funny. If you look at the bottom-up numbers from Consensus and what they're modeling, you would be at almost 20% growth for a lot of small cap and value names. Transport's, going to fall into that mix as well. Even if you cut those numbers for 2026 by 10%, you still get the best earnings growth you've had in over 3 years. So to us, we don't even have to believe Consensus. There's a lot of margin of safety there where we still get earnings inflecting higher. So yeah, it's having conviction, even if the street comes back on their numbers, really comfortable there.
All right. Speaking of earnings, we're into earnings season again. What are you looking at? What do you expect? And how do you think people are going to? We had that weird last quarter where we saw good returns. Everybody seemed happy with it, but the market still said no, it wasn't enough. Do you feel we'll see that again?
Yep. The one thing that has not changed, even though markets haven't really rip-roared higher in the last 3 months, valuations are still full. When we back this out, the markets for the next 5 years are pricing in like 12.5% earnings growth. That's compounded for the next 5 years. That's pretty impressive. So when you have that type of pricing in markets, it's not just about beating. We actually think beats probably 3-4%, pretty normal versus history, not as high as what we saw in Q2 and Q3, but it's all about the guidance. It's all about the forward numbers. We actually think 2026 numbers, even with some of the talk this week, our base case is still for them to move higher. So again, if you get the estimates moving higher, consensus numbers moving higher, that's really going to be the driver. There's no room to miss. You're probably not going to get huge reactions from normal beats. It's all about forward commentary. And as long as companies keep talking about margins and productivity, we think that's the path higher for the S&P 500.
Okay, we have to wrap it up there, Drew, but thanks very much for joining us.
Yeah, take care, Roger. Thank you.
Drew Pettit is a U.S. equity strategist at Citi Research. Coming up, hot picks in small cap tech. Our next guest has a Canadian lithium-ion battery and manufacturing company as his top pick when we come back. That's time for Hot Picks. Our next guest has Canadian lithium-ion battery and manufacturing company Electrovaya as his top pick. Electrovaya had its first profitable year in 2025, and he sees more upside for 2026. Joining us now is Kim Bolton, president and portfolio manager at Black Swan Dexteritas. And full disclosure, Kim was laughing because I have a Black Swan. First pen I got, and I'm still using it. It's great.
It's still
okay.
Still clicking.
Back to the real stuff now. Electrovaya, what do you like about it?
So I like doing these segments because it's Canadian, sort of small, medium size, and we do our homework. So Electrovaya is actually out of Mississauga. It's been around since like 1996. Last year was their first profitable year. It's an interesting company because their focus is on lithium-ion battery technology and manufacturing. So they have this platform called the Infinity Battery Technology Platform, and it just delivers industry-leading longevity and safety. You can imagine a few years ago, it very much catered to the EV market, but they did a fantastic job pivoting, and they started targeting electric forklifts, certainly into the robotic industry with the lithium-ion batteries, and then also airport ground equipment. And it's just been clicking along. It's been doing a great job.
I have to ask quick, how has it managed to go? It went 30 years without making a profit?
Yeah.
How did it keep going? What did it do?
Well, it's a battery company.
Yeah.
So it was sort of classical batteries, electric vehicles came along, sort of got on that gravy train, and then more recently sort of pivoted into these sort of robotics, but then they got into electric forklifts, and everything's sort of taken off. They had revenue last year of about 65 million, and they were finally profitable. Yeah.
One of those overnight success stories, right?
But if
30 years in the making.
Yeah, and actually the second one, 5N Plus, has also been around since 1996 too. And
that's a theme.
Yeah. So anyway, we like these guys. You can see it on the chart how it's actually sort of taken off here in the last year, but they've just pivoted into a very substantial business. So
and that's Electrovaya, or have we moved? We moved on to 5N now.
Electrovaya. So you asked how do they keep doing it? Last year they actually did a $25 million equity raise.
Yeah.
But then they had some individuals that were actually funding it. They got a new $25 million Bank of Montreal facility. They got a $51 million EXIM loan out there, and it's really sort of strengthened the balance sheet, and they've certainly done a fantastic job in the last year.
And you feel there's a lot of room to grow with it?
Yeah, absolutely.
And in that market, are they looking to expand beyond the forklifts and that?
Forklifts, but more recently they've got into the batteries for airport equipment moving around. Okay. And so you can see them sort of pivoting into anything that has sort of lithium ion batteries.
All right, I want to jump on because want to get the next two in here as well. 5N Plus, we briefly mentioned it.
Yeah.
Been around 30 years. What Montreal based? What do you like about it?
So you're probably wondering where the heck the name comes from, 5N Plus. So the 5N actually refers to the purity of materials they produce, specifically the level of purity of 99.999, which is the 5 nines. Yeah. And then the plus is the level of the purity, and so the plus signifies the company's commitment to providing additional value and innovation. So what they do is they're a niche supplier of ultra high purity metals to the semiconductor industry, to the energy, electronics, medical, and certainly into the aerospace side. And you can see it actually on the chart that they've done a fantastic job And they actually they reported back the beginning of November, so their next sort of Q4 report will be coming out very shortly. But they've actually raised their guidance, and so for 2026, for 2025, they'll probably come in around 65 million in revenue, and they've actually upped 2026 to 85 to 90 million.
That's a big jump.
Yeah. So, and you can see it on the chart that they've done a fantastic job.
Okay. And last one I want to get in here, quantum emotion.
Now, if you think the other ones were complicated, so the quantum,
I'm ready for this.
So the quantum emotion, we've been following it. Actually, we started following it, gosh, about a year and a half or 2 years ago, when it was sort of a penny stock. It was sort of sitting around 30, 40, 45 cents. But they've hit a lot of milestones. It's out of Montreal. A lot of the technology comes out of Sherbrooke University. And so basically what they have, so they're involved in quantum computing.
Yeah.
Classical computing is all about zeros and ones. Quantum computing is all about qubits, right? And so you can, so it's not as though it runs faster. It just does more in the same amount of time, because you have zeros and ones, but if you can divide up between zeros and ones, and it can run just as quick. And so they patent this electron tunneling quantum random number generator. And then they combine that with this proprietary post-quantum cryptology. And basically, they deliver a solution to protect against sort of classical cyber attacks, but in the quantum computing space. And so they've really sort of cracked both the quantum, but also the cybersecurity on it. And so if you go back like a year and a half, 2 years ago, it was around a 45, 50 cent stock. It got all the way up, the end of 2025, just shy of $6. Right now, it's trading at around $4.75.
You see some good opportunities with it.
It doesn't make money, but it has set up a lot of milestones, one of which Taiwan Semi has actually taken them on as a partner for the manufacturing. And so they've hit a lot of milestones.
All right.
Yeah, and I think it'll do well.
We got to wrap it up there.
Okay.
We're on a tight schedule day. Kim, thanks as always for joining us. Appreciate it.
Thanks, Roger.
That's Kim Bolton, President and Portfolio Manager at Black Swan Dexterity. And coming up, we're going to take a look at today's market drivers with Bloomberg's Monique Molina. So who are some of the market drivers today? Well, we'll find out. We're joined by Bloomberg Equities reporter Monique Molina. Monique, thanks as always for joining us. First up, we're talking Ciena. What's going on there?
Hi, thanks for having me. So Ciena, their shares were down quite a bit earlier. They reversed some of those losses now, but that's because Bank of America downgraded the stock. They say that they have some concerns that the growth that the company's seen in their backlog is reaching its peak. So I think there's still going to be a little bit more growth, and then we're kind of going to hit that peak. And they note that some of the companies that Ciena works with in the hyperscaler space and in the network provider space are also cutting back on their capital expenditures this year, and that's going to also weigh on Ciena's growing backlog as well. So they say the focus is really turning away from this to looking at what is the potential for their revenue to grow going forward, and they see that at the current valuation, it might be a little rich.
Okay, and next up, Southern Co.
Yes, so Southern Co., their stock was downgraded this morning at Wells Fargo. They're a utilities provider in the U.S. And while the analysts say that the company has been really able to grow and has a strong management team, they say there's a lot of political risk going forward. The company has a large base in Georgia, and Georgia had some changes to their utilities commission last year after some elections, and that put more pressure on Southern because there's been a focus on kind of affordability and targeting some of these companies related to that. And there's also going to be an upcoming election this year in Georgia. And they say until that happens in November, there's going to continue to be investor uncertainty around the stock, which is going to weigh on shares.
All right, so everybody sounds like they might be taking a little bit of a step back for a minute. Okay, and ConocoPhillips, the last company.
Yes, so ConocoPhillips, they were downgraded this morning at JP Morgan. And this is because they see some of these large investments that this company has been making having some impact on their ability to grow in other ways, including in their share price. They say that the investments in particular have made it so that the company is now more susceptible to movements in the price of oil, which is a concern, especially this year, as investors are expecting that oil could potentially reach a glut, and that might cause oil prices to go down. But they still see some opportunities for growth for Conoco, but not in the same way that they see for an Exxon or a Chevron.
Okay, we'll leave it there. Monique, thanks as always for joining us. That was Bloomberg's Monique Molima. Coming up next, we'll get some insight into Prime Minister Carney's deal with China, what it means for Canadian energy. Prime Minister Mark Carney says Canada fully stands behind Greenland and Denmark and strongly opposes tariffs over Greenland. In a speech at the World Economic Forum, Carney said rules-based international order is effectively dead and middle powers must work together to resist aggressive superpowers or face being on the menu. Carney says Ottawa's commitment to NATO's Joint Defense Clause is unwavering, adding that Canada is working with NATO partners to secure northern and western flanks. Silvercore Metals has acquired a 70% stake in Chaarat Gold for $162 million US in cash. The gold mining company holds licensing rights to projects in Kyrgyzstan. The deal includes hosting fully permitted gold projects and surrounding exploration licenses. The Vancouver-based company commits to invest $150 million US for Phase 1 and $400 million US for Phase 2 of the development of the mines in the Central Asian country. Shares of BHP are falling. They're down only about 1.6 right now, 1.7. The world's largest miner is raising its estimates for cost for a key potash project in Canada. The project was approved in 2021 for $5.7 billion US. The Australian company has now raised projected investment in the first phase to $8.4 billion. First production is now expected in the middle of 2027. Miner broadly met estimates for production across current mines. And looking at the markets, you can see the TSX, it is bouncing all around right now. It's off by about 0.42%. It's been in the red pretty much all morning with everything going on with Trump and the threat of more tariffs against some European countries over Greenland. The TSX down below 33,000, where it set a record high yesterday. Down south of the border, it's a similar situation. They were off even more at one point this morning. They're off, but improved a little bit. The S&P 500 down by about 1.15. The Dow down by about the same amount. And the NASDAQ is off by 1.33. Well, Prime Minister Mark Carney says Canada stands behind Greenland and Denmark. The Prime Minister making that clear while speaking at the World Economic Forum in Davos, Switzerland last hour. For more on this, we're joined by BNN Bloomberg's Lindsay Biscaya. Lindsay, thanks for joining us. It was quite the speech, wasn't it?
Quite the speech. A lot of quotable moments from that speech as well. And Mark Carney receiving a standing ovation afterwards, which apparently doesn't happen very often at Davos. But yeah, some really strong words coming from the Prime Minister in the face of all this turmoil that we're seeing, which has kind of come to a point while all these world leaders are gathering in Switzerland. Mark Carney saying that there is a rupture in the world order, the end of a pleasant fiction and the beginning of a harsh reality. And he's basically saying it's time for middle powers to really wake up and see see what's happening. He said middle powers must act together because if you're not at the table, you're on the menu. And of course, I know that's the quote. I'm already seeing that bouncing around online. So that is quite the statement. But, this comes at a time when Greenland is the focus because, of course, the U.S. wants to take control of Greenland. The EU is saying that that's not going to happen. Now we're seeing tariff threats from the U.S. because the EU is standing firm on that. And Carney going on to say today that Canada stands completely behind Greenland and Denmark. He says Canada supports their right to determine the future of Greenland, putting his foot down at a time when we were waiting to see exactly where Canada stood on this. And then Carney turned to how Canada has been reacting throughout this trade war and this turmoil that we've been seeing over the last year or so. We knew that Mark Carney was going to be pitching Canada to other countries, basically trying to diversify trade earlier and further. And he had a pitch today, and here's what he had to say about Canada.
Canada has what the world wants. We are an energy superpower. We hold vast reserves of critical minerals. We have the most educated population in the world. Our pension funds are amongst the world's largest and most sophisticated investors. In other words, we have capital, talent. We also have a government with immense fiscal capacity to act decisively. And we have the values to which many others aspire. Canada is a pluralistic society that works. Our public square is loud, diverse, and free. Canadians remain committed to sustainability. We are a stable and reliable partner in a world that is anything but.
So Carney saying that Canada was one of the first to receive that wake-up call that the world order was not what it once was, and so Canada now needs to diversify. Really interesting speech as well, because Mark Carney didn't actually mention the United States or Donald Trump by name throughout the whole speech, but obviously everybody kind of got the message and knew what he was talking about.
Superpowers. There aren't too many superpowers in the world. So it was an interesting speech with that. But also, he was asked about if Canada is uniquely vulnerable to the pressures from the U.S. I mean, our biggest neighbor.
Yeah, well,
Best
exactly.
Neighbor. We've had a good relationship.
We had a good relationship. They're our biggest trading partner. Yeah, Mark Carney was asked about that directly after he gave this speech. And he says that, yes, that's true. We are very vulnerable, obviously. But he says Canada has been able to withstand that pressure. He talked about jobs, how fast Canada's economy is growing within the G7. But he said that, of course, there has been struggles and Canada is reacting to that. He pointed to his trip to China last week, where we saw, a potential trade deal now on the table with another world superpower. And he talked about building relations with other countries as well. He talked about negotiating free trade pacts with India, Thailand, the Philippines. There was a number of different countries he mentioned. And he said that, Canada would rather not lose that partnership that we have with the U.S., that allyship that, a lot of people would probably envy. A lot of different countries around the world would envy. But this is where we're at. This is where the point we're at. And Canada has to do what it has to do to diversify away from
an interesting crossroads.
Yeah.
All right, Lindsay, thank you for that.
Thanks.
BNN Bloomberg's Lindsay Biscay. And we're going to talk about the relationship with China now that Prime Minister Mark Carney is trying to develop. He, of course, is in Switzerland and looking to pitch Canada. But let's turn and look at that deal with China in the context of Canada's energy sector. For that, we're joined by Grace Wilton. She's a senior energy advisor at Enpro. Grace, thanks as always for joining us. We've had a few days. We've had a few days now to digest this. Your thoughts on what this energy deal or what we might see is shaping up? How do you think it's going to shape up?
Well, upon closer inspection of the memorandum of understanding, it looks like there was no real agreement on petroleum. So that's oil or LNG. However, I think a lot of this meeting happened in camera. A lot of discussions happened without there being any documentation of what happened. So I think the main memorandum of understanding point was the bilateral communication regarding nuclear energy and sharing of information and technology. Obviously, the Prime Minister did say that there was an agreement that China would be our customer for more LNG and more oil, but that's not in the memorandum of understanding. Also in the memorandum. Oh, go ahead.
No, go ahead.
Yeah,
no, finish, please. No, finish, please.
I was going to say it was interesting too that I'm liking the level of trepidation and caution that the Canadian government is using in terms of the wording of the memorandum of understanding for nuclear energy in particular. There is a 6-month penalty-free exit clause. So while it's a five-year memorandum of understanding, at any point in time, either party can exit that MOU with 6 months notice. So I think that intellectual property concerns are there.
Always.
Yeah, probably as evidenced by the burner phones I hear anyway. But also just the wording, and I think the objective of this trip was just to open the door again, right? So there are a lot of agreements on travel, bilateral travel, and law enforcement agencies working together. So that's all good news. But oil and LNG, I think that the doors are open, but I didn't see anything in the memorandum of understanding for that. Did you?
Is that a bad thing that it wasn't there, that maybe for this is to go slow? And I imagine China is looking at us and going, well, are you guys going to suddenly turn and get buddy again with the U.S. and they're left out in the cold again?
Yeah, for sure. And some of those stipulations of that memorandum of understanding for canola and other tariffs kind of had an end date of the end of this year. So I think everybody is walking on eggshells or just being cautious, right? And I think that our government of Canada's top priority is making sure that the CUSMA is renegotiated and renews. So obviously that's a big question mark, right? So I would think that both are cautious, that China's even cautious. But I mean, the big one I think was canola, automobiles. Doug Ford's not too happy, but I don't think any of those automobiles are going to be visiting the States. So I don't know.
With energy, is this the impetus to push forward, do you think, with this announcement that they want more of our energy, to push forward with that pipeline and expanding?
Yeah, I think it's just, the verbal agreement that they would be interested in purchasing more, that was definitely stated, right? Even though it's not in a memorandum of understanding, it's definitely stated. And I think, obviously, China is purchasing the same type of oil from Venezuela right now. And even the U.S. has said, well, we'll sell it to China if they want it. So, I mean, an agreement's an agreement, I think. And if there's an agreement to purchase it, then that's fine. I just hope that it's straightforward and they're not they're not vying for ownership of our resources, let's say, right? It'd be a lot more attractive if it was just a straight customer purveyor relationship. Yeah, straight buy.
Does it feel like that they might want more than just buying our energy? They actually want to own our energy?
I don't know. I haven't found the source for it. I was looking for it actually, but there was word that the Chinese were interested in developing more oil sands. What does that look like? Does that look like ownership? I don't know. But the wording on the Canadian side definitely conveys that there's there's a lot of caution in terms of making sure that we don't overstep our boundaries in terms of prioritizing national security and intellectual property and the proper stewardship, obviously, of our natural resources.
Okay, we'll leave it there. Grace, thanks as always for joining us.
Okay, thanks, Roger.
Grace Wilton is Senior Energy Advisor at Enpro. Well, Canada will be increasing its presence in the Arctic, according to Foreign Affairs Minister Anita Anand. We'll bring you her comments from Davos after the break. Foreign Affairs Minister Anita Anand sat down with Lisa Abramovich at Bloomberg House on the sidelines of the World Economic Forum in Davos, Switzerland. She talked about Arctic security and U.S. relations. Have a listen.
I was the Minister of National Defense between 2021 and 2023 in Canada.
And at that time, the Arctic, and indeed Arctic security and sovereignty, was very much on our radar, and it continues to be the case with the Russian illegal invasion of Ukraine, for example, and Russian infrastructure moving further and further north. We, as an Arctic country, 70% of our coastline is interfacing with the Arctic, 40% of our territory. We have no choice but to ensure that we are bolstering our Arctic presence. We are doubling, indeed, our troop work and deployment nationally and internationally. We're going to make sure that we increase our defense spending to 5% of GDP, as NATO allies are doing. This is our promise. $80 billion was in our last budget for defense spending.
Are troops from NATO going to Greenland and going to Arctic regions in order to protect against possible incursions from China and from Russia or from the United States?
So the question of troops in Greenland seems to be so prevalent. Let me just say, NATO allies routinely do exercises, military exercises together. That's a fact. The point that I've been raising with Mark Rutte, the Secretary General of NATO, is historically NATO's gaze has been eastward, on the eastern flank. Canada's largest military operation is Operation Reassurance in Latvia, for example. But what I've been saying to Mark Rutte, including before the attention has been focused on Greenland, is that NATO is the North Atlantic Treaty Organization. NATO needs to have a northern and western focus. This is clear. It is one of the primary reasons that NATO was founded, in my view. Canada's a founding member of NATO, and we deeply encourage a greater focus on the Arctic. And finally, I'll say I'm headed to Greenland, a trip that was planned long before the past couple of weeks' events took place. I'll be going with my Danish and, of course, Greenlandic counterparts to open formally the Canadian consulate there during the first week of February.
Are we watching the NATO alliance collapse?
Not at all. What we are watching is the focus on geographical areas that demand attention by the strongest military alliance in the world. Canada will continue to remain at the table. We are a multilateral believer. We believe in the strength of working cooperatively and collaboratively with our allies, including at NATO and other multilateral organizations. That won't change, but we're also pragmatic. And so we come to the table in order to lead, in order to ensure that the rules-based international order, although it is shifting, is extremely important for global stability.
Are you concerned that the sovereignty of Canada is being threatened by the potential threat on Greenland's sovereignty?
Canada will never be the 51st state. We will always ensure that we stand foursquare behind our NATO allies.
Well, the market responded negatively to the news that U.S. President Donald Trump could keep Kevin Hassett in his current role, removing him from consideration for the next Federal Reserve chair. We sat down with Thomas Honig, former chief executive of the Federal Reserve Bank of Canada's Kansas City, to discuss his take on the fact that Hassett is likely out of the running.
It's not necessarily a surprise. The president, Trump, moves back and forth as he goes through this process. And, when Hassett was the lead, I wasn't so sure because he does change his mind, and it looks like he changed his mind towards Hassett this time. I now understand that perhaps Kevin Warsh is in the lead, but no one knows. It's all speculation at this stage.
How has the probe into Jerome Powell, the current chair, changed things, do you think?
Well, I don't know for sure, but it looks like what it's done is create a great deal of skepticism around the selection of Hassett. Right after that, there was a lot of discussion about it, whether, given his closeness in terms of his role, his current role with the Trump administration, that he would give the markets any confidence of independence. And therefore, that's caused perhaps people inside the administration, perhaps Trump himself, to say, well, maybe I better, think about someone else. And Asset is a good advisor to me in the Economic Council. So he's kind of gone down that path. I don't know that there's more explanation to it than that, but certainly some of the turmoil over the last week has had some impact on that, I'm sure.
Do you believe Powell will stay on as part of the committee even once he's done his term as chair in May?
Well, that's a hard one to read, too. I know that, given the amount of pressure on Powell and the amount of time he spent in that job, I would think he would be interested in stepping away. But given the circumstances and the fact that there is this most recent kind of challenge to the FOMC, he might temporarily stay on in terms of transition to kind of convince in his own mind whoever selected as chairman will be able to act or be willing to act independently of the immediate oversight of the president. So those are factors that will come into his decision, I'm sure, but how he will come out, I doubt anyone knows, but maybe Powell and his wife only. Do
you think that you touched on the fact that perhaps they're looking at somebody who would be further away from the president, seeing it more as independent, and who do you think leads in that light?
Well, I mean, I think that's part of it. Perception matters, I suppose, and this will give it a more of a perception of, well, they thought he would be the person. I'm choosing someone else. Hassett said he agrees with that. So this would shift the speculation towards the other three and maybe someone that no one knows about. The other three candidates and perhaps someone that we don't even know about. So that's how you have to kind of look at this in the transition stage.
Do you think the focus for the Federal Reserve is still on the labor market and weakness seen there? And I'm asking because, of course, now we have the new threat of tariffs on European products that are coming into the U.S.
Yeah. I think for this FOMC, given what I'll call the three Republican-related nominees and Powell himself, I think employment is the issue that they will be focused or have been focused on and will continue to be focused on. And if you look at it objectively, the price index has been near 3% for a year. That does not seem to be the priority given their most recent cut. And therefore, I think employment is a very important topic. Having said that, I am of the opinion that given how strong the economy in the United States for the moment appears to be, that this next meeting they have will be one in which they will kind of wait and see, that they'll not move this time. But you never know. I mean, it is an FOMC. They are focused on unemployment, and they seem to have de-emphasized inflation. So anything can happen. But I think at the moment, they would want to wait and see and not move at this meeting.
How would you characterize affordability right now in the U.S.? It's definitely an issue for Canadians, and I'm just wondering if it's as big of an issue for Americans right now.
Well, it is an issue in the United States. It's being made an issue. Goods in the United States, services in the United States are much more expensive than they were, 3 or 4 years ago. They have also increased in the last year with the inflation that we've had, and also some asset inflation. So it has been made a political issue, and I think that has entered the picture for the president. He's talked about putting caps on credit card debt. He's talked about moving funds from Fannie and Freddie, our what I call our housing agencies in a sense, and moving funds to help fund loans, home loans. So yeah, affordability is the issue, and it's becoming very political, and decisions are being made around that topic.
And you think it'll be more of an issue as the year goes on, as we get to the midterms?
I suspect it will be. I think the Democrats will make it an issue if they can, and given the cost of housing in the United States and cost of goods, I think they will have data that they will use to make it an issue, regardless of the president's efforts.
Marla was speaking with Thomas Honig, former chief executive of the Federal Reserve Bank of Kansas City. Coming up, we'll check in on the markets on Bay and Wall Street. Market Call is coming up next, and today on the show we have Nick Mersch. He is portfolio manager at Purpose Investments, and we'll be taking your questions on technology stocks. All right, let's take a look at the markets, see how they are doing. First up, it's Bay Street. It's back below. It was over 33,000, actually closed a record high of 33,092, I believe was the number. Let me just, 33,090. Sorry, that's what. So it's had a good run to start the year. Today, it's taking a bit of a beating with everything that's going on with President Trump and the talk of tariffs and taking Greenland. That's having a factor right now. But it's off today by about 0.49%. But I just want to take a look at one of the actual performers, Orla Mining. A couple of the mining companies are doing all right now, but Orla is up more than 11%. It is spiking right now after the company said it expects to beat its 2025 gold production guidance and analyst estimates and outline growth targets for 2026. The gold output, which is 300,000, that's what they expect to they hope to meet after predicting 265,000, 285,000 ounces of gold. And for next year, they expect 340 to 360,000. And let's just take one quick peek at the southern border of the U.S. markets, all down and down quite a bit. Thanks for watching Morning Markets. We'll see you back here tomorrow.